Hey, my name is Jack Nicholson and welcome to my YouTube channel. I've got some good news. We've got a mortgage rate for residential mortgages that is actually down. In the comments recently, a lot of you have been saying, why have we got so much bad news at the moment? And I can't help that. I apologise that we've had so many bad things. It's just so much being thrown at us by Labour and it hasn't been a great few months. But this video is all about a residential lender that's cut rates. They're below 4%, which is really good. And that's a magic number that really does get a few people active in the market. So we're going to talk about all of that in this video. And if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We've just hit 43,000 subscribers. Thank you to everybody that subscribes to the channel. I really appreciate it. And let's get some more views on this video. How do we do that, you ask? Simple. Smash like, tickle like, do something to that like button. That really helps with the YouTube algorithm, and that's why the channel has grown so much in the last year. Thanks to everyone that does that. So, a lot of lenders have been putting up rates, and that is frustrating. Maybe you've been waiting for a refinance, and even if we just reversed back 4 or 5 weeks ago, at that point, all of the economists were saying, look, rates are going to come tumbling down. The economy doesn't look very strong. And when we go into recession, which we still could, then it looks like that you'd cut rates. But the inflation data came in much higher than expected. I think the expectation was 3.3%. We got 3.6%, which was a bit of a surprise. We knew inflation was going to come back, but we didn't expect it to come back that quickly. And in that time, you've got a trade war going on around the world, and you've got spats with Donald Trump and Elon Musk, which gives a lot of uncertainty that they're not focused on the important stuff like cutting government waste and getting these trade deals done. Because although that's in America, those trade deals getting done is going to give predictability to businesses and allow people to finally get things moving forward. So it does impact us. And what rates are based off in this country is something called the SONIA swap rate. And because of the uncertainty and because the inflation went up, the SONIA swap rate increased. Now, this is the rate that your bank that you borrow from gets their money at. So while the Bank of England rate is important for those people on a tracker, what's more important for your mortgage rate on a remortgage or a new deal is the SONIA swap rate. And that has gone up over the last few weeks. And that's gone up because of the tariffs. It's gone up because of the inflation data and just the unpredictability of everything at the moment. And so because of that, most lenders started to creep up their rates. They weren't huge increases. We did some videos the other day. Some people did as much as 0.25%, but some it was 0.1%. So it wasn't a massive increase. But Nationwide have decided to buck the trend. That's good. And so Nationwide last year has been really aggressive with their mortgage lending. They've got multiple brands that you might know of or maybe you're with already. So I have one Virgin Money mortgage. I've actually got an application in with Virgin Money at this point in time. So I'm waiting to see how that progresses and see if I get the right valuation that I'm looking for with that one. They also have the Mortgage Works as well. And so the Mortgage Works is their buy-to-let, and then they've got the Nationwide, which is their residential, along with Virgin Money. So look, this stuff is good that they're moving their rates down, and they're doing that because they want to get more market share. And the market, while it did pick up in May, is still slower than the first quarter. And so how much are they cutting? Well, they're knocking off 0.12%, which is not bad. And that brings their best rate to for a 2-year deal down to 3.9%. So just under, back under that 4%, which is good because some lenders have gone back above that now. The fees on this one are $1,499. So not too bad. Depends on the size of your loan, doesn't it? If you've got a 500 grand house, is not too bad. But if you've got a 50 grand house, it's quite a big chunk of money there. The loan to value, a lot of these good deals are on 60% loan to value at the moment, because lenders are looking to get on their books the good debt, the safe debt. Should the market turn, they're actively marketing to get those safe deals. It's not likely the market would crash 40%. So that does give them some protection. And if you've got 60% loan to value, the chances are it's more affordable for you. So you're likely to keep up the payments rather than someone that's just starting new on 100% mortgage, if that makes sense. Now, if you don't have 60% loan to value, they do have some other deals out there. So the other deal that they've got is it's a 2-year deal as well. And that deal is at 4.04%. So just above that 4%. Might put off some people, but it's not going to be that much difference in your monthly payments. The fee's a lot lower, so it's £999. I know the fees are high. We're not getting cashback deals like we used to, or £200 fees, but they will creep back down as the market needs that, and they need to get a bit more competitive. And with this deal, they will give it to you on a 75% loan to value. So you're not going to get these absolutely cracking deals on 5% deposits, 10% deposits. They want you to have a bit of skin in the game yourself. So either you need a big deposit or you need to build up a fair bit of equity. Now, a lot of people, the majority of homeowners would have this kind of equity in their property. So this is the big chunk of the market that this does cover. Now, are other lenders going to fight back and do some cuts? It'll be interesting to see. We had last year, NatWest were quite aggressive. They wanted to fight with Nationwide constantly, and they were pushing each other down. One would cut, then a few weeks later, the next one would cut. So that would be a lender that I would definitely keep an eye on. But yeah, I don't think for the next few weeks, you're going to see a mad cut and lots of people looking to cut rates at the moment. I think there's a lot of uncertainty. I think a lot of these lenders just want to see all these trade deals get tied up, and that gives a bit more certainty to the money markets and businesses, and that gives more certainty to the economy, and then they can have more of a prediction on where things are going. That's what the Federal Reserve wants. And if the Federal Reserve get more predictability and know where things are going, then they'll start cutting. They've said that themselves. They've said, look, we can't cut because we need to see what impact all of this tariff stuff has. And the Bank of England want to be fairly close to where the Federal Reserve sits. So I'm sure you'll see interest rate cuts in other countries. Also, the EU will probably keep cutting because their inflation is significantly lower than ours. Anyway, would you take this deal at under 4%? For a lot of people coming off, there's 500,000 people still this year that are coming off those really ultra low interest rates, and they're going to be having to look at deals like this. Let me know if you would consider this. Do make sure you smash like, do subscribe, do check out all the other content as well on the channel, including this video right here.